Good morning from Chicago. It's 8:02 a.m. Chicago time on Thursday, the 19th of October, 2023. This is episode number 2561. Is it 61, really? Interesting. I have to look at that. May have been misnumbered. Real quick. It is 61. Interesting. Okay. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got today coming into the session. We have yet again kind of a mixed start yesterday. We were a little bit off. We had risk-off sentiment. The NASDAQ, strong-ish today, carrying the rest of them. NASDAQ and S&P up above their settlement prices. We did have quite a bit in terms of earnings. We had AT&T beat by 8.5%. Taiwan Semiconductor, which is huge, beat by 10%. Philip Morris, 3%. American Airlines beat by 52%. Don't believe those airlines that tell you that the ticket there's a tight profit margin. There's a clearly huge amount of money made there. Nokia missed by 40%. Nokia came in at 5.4 cents versus 9 cents expected. Union Pacific, Truist, and many others. I'm not going to go through all of them. After the close, we get CSX, which is transportation, KeyCorp, Pool, and that's about it. Initial claims this morning came in quite strong. When we look at initial claims, we see that it came in at 198,000 versus 212. Now, this remains a thorn in the Fed's side because it just keeps the pressure on. Now, a lot of the work that the Fed would normally be doing is being done by the markets in that yields are increasing, are pushing higher. But overall, just the job market remains pretty hot versus expectations. Again, 198,000 versus 212. We also got Philly Fed's manufacturing index came in at -9, expected at -6. The prior is -3, 13.5. Pardon me. Fed's Jefferson is on right now. We're looking for existing home sales after the open at 10 o'clock. And as you can see in the sheet there, we have Fed's Chair Powell at noon Eastern. There is a 4-week and an 8-week bill at 11:30, and then natural gas 10:30. And then we find out what the 15-year and 30-year mortgage rates are at 12. Imagine a 30-year mortgage rate now is at 7. The prior was 7.57. It's just insane. I mean, it's not terrible by historical measures, but it's terrible versus the 2.3% it was just about a year ago or a year and a half ago. Then in the afternoon, we get Fed's Goolsbee, Fed's Barr, Fed's Bostic, Fed's Harker, Fed's Logan. It's just a parade. It's like a fashion show. They just keep coming down the runway. This evening, GFK consumer confidence out of Great Britain, and then loan prime, the loan prime rate numbers out of China at 9:15. It says we have the inflation rate at 7:30, but I don't see that. I'm not seeing that. I wonder if I have something missing. Okay, but be aware that 7:30, it looks like it has the Japanese inflation rate. Let's look at the S&P. The S&P has a multi-distribution profile this morning, pretty active price discovery. It's pushing highs currently, relatively weakish high The S&P is just shoving its way back to an all-important number we'll talk about, which is the 43.56.57 from yesterday. The range is 31.75 points. The inventory has been dropping in terms of shorts. It's balancing out just bit by bit. The inventory is 40% short. The point of control is pretty low at 43.36 this morning. Point of control and the mid are in line with each other, and the market has separated from that. So here's what was expected yesterday. This is from yesterday's show. I don't like calling it a show. It just seems like entertainment. But yesterday, if you recall, the expectation was for us to retest up into the range right here, this belly that I drew. Very common for the market to kind of squeeze back into balance before running away. The expectation is that it would run away. Here's a little bit more detail on what was expected. Is pushing up, drop into the 66. The 57 really is next, and then 43. That's from yesterday's analysis. And we'll look in a second at what we've got. Here are the key expectations. 57, 40, 43. Here's what we did yesterday. Probably better to see it on the active chart, but it was a very busy active chart. So while it was not difficult to read what the market's intentions were yesterday, it was really, I found it really difficult to trade. Took 3 trades in the morning, and 2 losses and a scratch. The scratch was an error trade. Very whippy, and I found it, I found myself already dealing with fatigue, but also I just found that it was just whipsawing. At the end of the day, the plan was on point. We ended up pushing the 40, as you can see down here, squeezing into the 40 right here, ended up pushing into the 57 right there. This is the 57 test. Push up, pull back, and then runs all the way back. It looks like it's done to the downside. How many times did it look like it was done to the downside, and then it continued to explode downwards? So it tests the 57, jumps right back into the IB, right into these key day references, overnight low, and then comes all the way back to the bottom, only to retest the IB, fall through. And then you had what was basically an excess low at the low yesterday. But the overnight session, just immediately went down to the excess low, which we wouldn't expect. We expect the market to move away from an excess low quite rapidly because it's an excess low. And all we're doing is we're walking back to the all-important 56.57. So the LIS for today's session for me is the 56.57. You could see there's separation between the day-generated prices of the overnight point of control, the full session mid, and the full session VWAP well below us. So the market's a little bit out of balance on the current session. The market is showing imbalance also. It's out of balance to the sell side on the overall trend as well. So there's a sell side imbalance, but then today we have a buying imbalance in the overnight session. So this is contrary to the overnight session is going contrary to the overall trend. Here's the overall trend right here. So you could see that, we battled back and forth and fought our way out of balance, which was completely expected. Fought our way out of balance here. Went back almost to the point of control yesterday. Missed it by a bit. I think the first trade I took was 83 long, targeting 94, and it went up a couple points and then just exploded downwards for a stop. That was early in the session. Just seems like you should really avoid the first bracket entirely, if not the second bracket as well, meaning sitting out for an entire hour. And then so we opened, tested up, came down, and then ran all the way down. And there's your excess low. As you can see, very clear excess low, very poor volume, very quick to get out of that area. And it settled at 42.25. This morning it's up here at 50 with a high of 52.50. So we are approaching what is yesterday's value low on a pretty wide-ranging, whiplashy balance yesterday. But we have a lower high on the session. We've put in a lower high. We've rejected the balance point up here. We've rejected the MC point of control up here at 4,400. We could not get there, and we decided to push out of the balance range, which is up here, into the lower balance range, which we've built up a little bit more. So in my opinion, overall, the indices across the board are a bit of a mess right now. There's a fight between the idea that the market is in good shape and is performing well based on earnings and other inputs. And then there's the problem that we have with the notes pushing lower. As you can see, new lows on the bond futures, just a massive trend lower. Same thing with the notes, the 10-year note pushing lower. Remember, as futures, as the bond price pushes lower, yield goes up because the coupon value stays the same, right? So what this is saying is there's still a lot of growth pressure. There's still a lot of interest rate pressure. The Fed needs to do something. The Fed fund futures are pricing in a strong potential for Fed action, but the market is doing the work of the Fed by pushing yields up. So it's a story, it's a macro story that's screaming from both sides. And so what we end up with is this very whipsawy kind of a trade. Here's gold. Gold is a protection against inflation, and gold is just ripping back up into the upper balance. It had dropped and given us a nice rally in equities, but it has since rallied, and gold is a protection-seeking commodity. So I'm giving you the kind of the broader strokes here because overall today to me looks like it'll be very much like yesterday. We're very likely to push right back into the 57, 56. I'm going to see what the test is at the 57, 56. If that doesn't hold, then we have to target the excess. The excess begins at settlement at 42. 42, if short, got to take something off before that, and then see how it falls into the low, into below the 42, into the excess low. If it takes out the 42, then the next level we're looking for that we talked about yesterday was 16, and then it's just very quick from there because the structure behind the 16 is very poor. That comes to us from 2 Fridays ago for non-farm payrolls, that huge up day that we had. So we're still, the market condition overall, the market condition is trying to switch from balance to sell imbalance. So from balance to out of balance on the sell side. But it's not doing a great job doing that because every time it would sell off, The next day you have a run to the other side. So here we are opening above the prior settle. We're opening below yesterday's balance and value, but we're opening in value of a few days ago. This balance that we formed a few days ago at 43.60. So it's just you're probably detecting that there's kind of a mess going on here. So more information is needed. Okay, so that's that. Crude oil yesterday was very balanced, also very choppy. Crude couldn't really find its footing and ended up bouncing. Look at that crude, just overlapping bars, heavy overlapping bars. Crude would also have been a difficult trade yesterday, most likely a loss generator. And then today we're opening in range, out of value below. Still looking for crude to continue to balance out up here at the 87 area. So not much to add there. NASDAQ, the one that was strongest for a long time, closed the gap above, and everything else is now officially one time framing down and is weak. The NASDAQ's walking its way back to the 14,950. Below the 14,950, you get this weak structure from that non-farm payrolls rally. So the NASDAQ all of a sudden is very, very weak. The NASDAQ's much more rate sensitive than the S&P. The S&P has a good portion of the S&P. I think it's 17 or 16% is the financials. And let's see what it is the financials, and the financials do better in a higher interest rate environment. So let's see if I'm right. Oh, it's even smaller. 13% of the S&P is financials, which benefit from higher rates, right? The financial, you've seen how JP Morgan and others have performed. Profit margins are higher with higher interest rates. So the S&P tends to be more resilient with higher interest rates. The NASDAQ is not. So that's that. So what's the plan for today? The plan for today, we're looking for the open, a potential test of that 56.57 value low. If it drops and gets back into the prior settlement and does not bounce, then it'll be very quick down into the 16. And then from here, we're looking at 4,300, 4,290 as strong targets, strong possibilities. Otherwise, we open, we respond back, and then we impulse back up, and then we are continuing to be in balance, come back into yesterday's point of control at 62 and hold this lower balance area. Most likely check the upper value, which is the bottom of this balance is the upper value of yesterday, 43.80. So it's because of the separation between where the overnight session is traded to where we are now, the market overnight is out of balance. So I'm just keeping my hands off at the open, which isn't exciting for the Convergent Trading Accelerator program participants to watch me sit on my hands while live trading. But we've got to do what the market tells us to do, okay? I'll catch you all later. Good luck, and we'll talk soon. Take care.